Could the committee members please find their seats? We're ready to start finance in a minute or two. Good afternoon. I'd like to call the meeting of the Finance Committee to order. Mr. Johnson, are there any speakers in the public who
Yes,
are registered?
sir. We have one speaker. Murray Bowden is here.
Good afternoon. There are two items I'd like to speak about today. The first is from the Metro-North Railroad, the acquisition of the property in Sleepy Hollow. It is a extremely important acquisition, and I hope that it will be looked over very carefully for its implications. I know it well. I eat at the Bridgeview Tavern right above it on a regular basis for a number of years. I've watched it get cleaned up from a junkyard to immaculate. I was just there Saturday having lunch. The other item regards Metro-North Railroad. I've asked for a number of years for the regulation under which they blow the train horn at 125th Street. 125th Street has signboards up there telling you which train is coming out of which track and announcements to the same effect. The rule under which Metro-North blows the horn is written by New York Central Railroad probably 50 years ago. If the president of the railroad cannot give you chapter and verse why they do it, and I would like a copy of it so that I can see if it's accurate. And if there is no reason for blowing the horn, because there is no federal regulation to blow it, then I ask the board to replace the president of Metro-North Railroad with somebody who pays attention. That's just the tip of the iceberg. There are another half a dozen issues that are not being addressed. But that's the clearest. Those are the two issues I want to speak about today.
Are there any other public speakers?
That's it for the public speakers.
Thank you. If there are none, minutes of the December 14th meeting need approval. May I have a motion and a second? Motion and a second? Motion, second. Any questions or comments? All in favor? The minutes are approved. Mr. Johnson, would you take us through the work plan?
There are no changes to the work plan.
Then Budget Watch?
Sure. January Budget Watch is a first look at 2015 results, and what we do is we look at the preliminary results for revenues, subsidies, and debt service. At this point, 2015 operating expenses are either unavailable or they're too premature to be meaningful at this point. We're comparing those actual results with the 2015 final estimate which is the forecast that was captured in the November financial plan and that was approved by the board in December. So I'm going to start first with the revenues. Looking at passenger revenues, overall they were slightly favorable by 18.9 million or 0.3%. Of that amount, New York City Transit was 13.9 million or 0.3% favorable due to higher subway and bus revenues that were partly offset by lower paratransit revenue. At the commuter railroads, passenger revenue was also slightly favorable. Good news at B&T, toll revenue was favorable due to increased traffic from unseasonably mild weather and continued low fuel prices. Don Sparrow just spoke about that at the last meeting. Moving to debt service, they were 9.3 million or 0.4% favorable, and that was due to very low short-term variable interest rates. Going to subsidies, TOA receipts were on target. Petroleum business tax, or PBT, receipts were 5.7 million or 0.9% favorable. The payroll mobility tax, PMT, was 5.9 million or 0.4% unfavorable, so those two pretty much canceled each other out. I'm going to talk next about our MTA trust account receipts. Those are the licenses, registrations, taxis, and auto rentals. Now, those numbers had been going down over the year, and in fact, in the November forecast, we reduced that forecast by 8 million to reflect the impact that transportation network companies such as Uber have been having on these receipts. The final results for 2015 indicate that the overall impact of these app-based services is a little bit higher than what we projected in the November plan. We saw a $9 million unfavorable variance to that revised forecast, but we do think that that $9 million variance, much of that is the result of timing between monies received by the state and ultimately passed on to the MTA. We'll be looking at that closer in the next month. The other major subsidy story was real estate taxes. Now, those taxes, as you're probably aware, have been on an upswing since they bottomed out in 2009 and 2010. In fact, they were coming up again, positive again this year, and we increased the final estimate in November by $80 million. Now, compared with that forecast, actual revenues were 47 million or 3.3% lower. But I want to point out that those revenues have traditionally a lot of variability from month to month, so we're really not that concerned about that. In fact, we have seen very preliminary January results that were actually $19 million favorable. Now, I know I just presented a lot of information, but if you were to take the ups and downs, the favorable passenger and toll revenue, the lower debt service, offset with the real estate and the MTA trust account receipts, pretty much a wash. So we're kind of where we expected in the net when you look at total results against the final estimate. Any questions on Budget Watch?
Anybody for Finance Watch and Marcia Tanya?
Good afternoon, everyone. Pat couldn't be here due to the storm, so I'm taking his place. Finance Watch is on page 20, and we're going to start with a transaction that is currently listed as an upcoming transaction, but we actually priced it last week, so I have some information for you about that. It's the TBTA General Revenue Bond Series 2016A. It was 300 million par new money, as well as we took advantage of the market conditions and put in some refunding bonds as well. That was 241.2 million of refunding par. Of the refunded par, the present value savings was 34.6 million or 13.5% of the refunded par value, and that refunded par value was 256 million. We had great retail response as well as institutional response with very tight spreads and tighter than historical spreads for the TBTA credit. All-in TIC for the true interest cost for the entire issuance was 3.24%. This was book running senior manager Citigroup together with special co-senior managers Cabrera Capital Markets, an MBE firm, as well as Academy Securities, a service-disabled veteran-owned firm. And we did receive the BIC waiver on the refunded portion. The next item was actually reported by Pat last week, but we have the statistics listed for the TRB Series 2015F. I won't go through all of that material again, but just note that the all-in TIC for that transaction was 3.22%. We did have a remarketing of the TBTA, some FRNs that were converted to variable rate demand obligations. The 2013D-2A, these were federally taxable. They were both converted to weekly mode with letters of credit supported by Bank of America. The letter of credit is set to expire on December 14th, 2018. And Pat mentioned this last month, but also just to reiterate, we do have an upcoming transaction on the TRB side. It's going to retire $500 million of the 2015A bands, and it'll also be, we're looking at issuing those as green bonds. We're still working towards that certification that Pat mentioned last month. And we're excited to do that. As Pat and Bob both mentioned, the idea is that we're going to be widening our investor pool. That's what our goal is there. We do have an all WMBE and service disabled top team on that. It's Ramirez is going to be the book runner on that, and special co-seniors will be Stern Brothers, and Drexel Hamilton will be the service disabled firm. Lastly, we have a fuel hedging report. On December 17th, MTA executed a 2.87 gallon ultra-low sulfur diesel fuel hedge with Goldman Sachs and Company J. Aaron at an all-in price of $1.48 per gallon. All of the normal counterparties participated in the bidding. The hedge covers the period from December 2016 through November 2017. And that's it for Finance Watch. Are there any questions? Mr. Mordler?
To what extent, if any, have the decreasing prices in gasoline impacted upon the hedges that we have undertaken previously?
Clearly, those are out of the money because we are seeing prices that are significantly below. As you recall, we are hedging 50% of the gallonage that we're expecting. So, we know that what we've locked in the past is above market, but we are continuing to get favorable bids, and so we're locking in going forward for 18 to 24 months at these favorable levels too. Again, the whole point of what we're doing is for budget certainty.
You're doing it now pretty much on a rolling basis or
Yes.
some form of ladder basis?
It's rolling. What we do is monthly gallonage, so that's what we're doing.
Now, where they are out of the money, do you at the end of a given period report to us how much we are out of the money and the cost and the like?
Yes, we're doing that on a monthly basis. In the back of the finance book and the other materials, we have kind of the year-to-date calculation on where we are.
Please understand, this is not intended in any way to be critical of that. I compliment you for it, to the contrary. I just wanted to know where we are on it.
Yes.
And you can find that on page 109, 110, and 111.
Mr. Ballard?
So, 2 points. So just for clarification, because of the unanticipated plunge of the price of oil and fuel, things are in a slightly different position where we thought they would be 6 months ago or more. Are we flexible enough in how we're dealing with this with respect to hedges? Is there some more help you need from us to allow you to accomplish anything else?
No, we're continuing with the same strategy that we had of doing basically hedging 50% of our monthly usage. And again, we're locking in favorable prices going forward. But again, the whole point of this is to try to have the discipline to just do budget certainty and not to use this as an opportunity to, speculate and try to lock in something that, frankly, we could be wrong, by locking in now.
Then 2 more quick things on Finance Watch, please. The deal you just announced that will be coming, I guess, Ramirez, is that, as senior book runner, is that the last in the rotation according to our list?
It is actually the city, the one that I mentioned was city was actually the very last in the rotation. The order was reversed partly because we were exploring the green bond certification, so it slowed that other transaction down. But we are at the end, and we will be issuing the RFP sometime soon. We're working on that now.
And then what is the status of the green bond certification?
We're very close to the end. We're discussing it with Climate Bonds Initiative. It's that non-governmental, nonprofit entity. We've worked with them. Their verification. We hired a verification agent to verify that we complied with the standards. So we're getting very close to the end, and it's now just a little bit of some legal documents going back and forth.
Great. Well, I hope we're aggressive in that, because so much, if not all, of what we do is green-related as a public transportation agency. Then the last question on Finance Watch, the refunding that you said was just undertaken, what was the PV savings, and what was the percent of the PV savings, please?
Sorry, I just had that in front of me. The refunded par amount, and that was from several different series from the TBTA family that will have that fleshed out for you in next month. It was 256 million par, refunded par. Present value savings was 34.6 million, or 13.5% of that refunded par.
That was just the refunding part. Then there was new money in addition to that.
New money as well.
Okay, good job. Thank you.
Anyone else? Then could you please take us through the action items?
Yeah, good. Finance items.
Sure. We have two staff summaries for you. One is the addition of some approval of remarketing agents. In particular, we'd like to note the Bank of Tokyo Mitsubishi. We have a active letter of credits with them, and they have a broker-dealer affiliate that's would like to start to undertake the remarketing side of that. So we are happy to see them get into that side of the business. Also, Clarity provides an electronic platform. It's related to Arbor, which is a broker-dealer that is registered with the SEC, and we wanted to add them to the existing approved pool of variable rate remarketing agents and dealers. I think you want to do that individually or all of them?
You could do
Okay.
individually, yeah.
Okay.
So we need a motion on that. Individually or separate? Either one.
Well, let's hear the second one.
Okay,
then just do it
and
as
then the
a-
second one is, it's for the qualification and selection of banks. We back in 2010, we had the request for qualifications for a qualified pool of commercial banks. We'd like to expand that authority so that we are able to use the same pool of banks for new lines of working capital as well as new lines of credit. For example, rather than just substitute an existing letter of credit, it would be able to provide new money in the form of a letter of credit. And you'll see as I go through the year-end review, we actually did have a lot of activity in that variable rate mode.
Are all of the banks listed at the top
Yes,
of page
if you-
35 actively in the business?
They, I might defer to Bob on that. Sorry, I apologize.
Yes. I believe so.
Good. It's important to keep it current, and you have enough of a leeway to go back and get some good competition going. Banks go in and out of this business so frequently. That was the genesis of my question, but thank you. Okay.
And Pat did ask me to mention, and I apologize that I didn't, that we are working closely with our financial advisor, PFM, to always identify these most active banks and make sure that we do have the current commercial banks list.
Anyone else?
So are you just rolling over the existing financial institutions? Are you going to continue the same ones, or what?
What we're doing is, as we need a new facility, these are the banks that we will go to submit bids on that new facility. So we're really kind of pre-qualifying, if you will, people that are in the business we can track and monitor to make sure that they're maintaining creditworthiness and things like that. But then when we do need a bank facility, we've already identified banks that we want to deal with.
Correct me if I'm wrong. In terms of a depository, is that governed by the Controller's Office, or are these banks also depositories?
These would be, subject to the controller, Office of the Controller, and also Federal Reserve now is reviewing, all of these financial institutions.
If there are no other questions or comments on both action items, may I have a motion? Second. All in favor? Both action items are approved. Reports and information items?
Yeah, the first one is the Finance Department 2015 year-end review, and Marcia gets to keep going.
Okay. All right, for the year-end review, as of December 31st, 2015, we had $35.9 billion of outstanding debt, and at an all-in true interest cost of 3.69%. And as you can see, we still do have most of it is fixed rate, 80.8%. And we have broken out the bands now, so you can see what we have outstanding in bands. That's 1.7 billion or 4.7%. Debt by resolution, the transportation revenue credit still is our workhorse with 61% of the outstanding portfolio. Next would be the TBTA senior, and then, of course, the dedicated tax fund. Debt service on outstanding bonds by credit, as you all know, that we do try to keep a 30-year level debt structure as we're going out in the market, but it is pretty dramatic that you can see, even with that approach, there is a pretty big drop-off in after 2032. One thing that we'll talk about in just a moment is the band strategy that will be able to better match the assets and debt liability, especially with those longer average useful life assets, and in which case we may be able to level out the back end there. Market recap. I won't go through all of this, but the volume of long-term municipal bonds was up in 2015. There were slightly higher treasury rates. There was a flattening of the yield curve, and larger inflows to the municipal bonds funds. And I'd like to thank. Okay. I'd like to thank PFM for putting that together for us.
Thank you. I'm of the school of thought that you should try and debt finance with terms as long as possible, given the asset being financed. So what you just touched on that point with respect to using notes and take out with bonds. But I hope we're also, I guess, Bob, I don't mean to be unfair with Pat's absence, but I hope we're trying to maximize the length of the term of our bonds. I mean, we shouldn't have 30-year bonds. We shouldn't, hopefully, even have, depending on what we're using, we could be as long as the bond market allows.
Right. And Marcia is going to talk about that, the strategy that we have. One issue is that much of our debt has to be approved by the state controller's office, the terms of that debt, and they pretty much limit everyone to issuing 30-year bonds. 30-year bonds with level debt service is what we traditionally do. We've been able to get them to allow us to sell longer maturity bonds when we can demonstrate that the projects that we're going to finance with proceeds of those bonds do in fact have a longer economic useful life. And when we typically sell bonds, we put the proceeds into a pool, and we're not quite sure what projects will be funded. But with this band strategy that Marcia will talk about, we know exactly what projects we financed, and to the extent that we're doing longer-lived projects such as Second Avenue or East Side Access that does have a very significantly longer economic useful life, we're able to sell longer-term debt. So that is definitely a strategy that we're pursuing because it's just good public policy as well.
2015, can you still hear me? 2015 transaction summary. All in all, it was $6.8 billion in transactions. We were very busy throughout the year, and I'll go into a little bit more about the number of those transactions. The total bond, $2.9 billion in new money, and it was a variety of fixed rate, FRNs, bands, and the variable rate, the new money letter of credit that we mentioned. total bond finance capital investments was $2.62 billion, and we do have a slide that lays out more of the details of what that went to. And I'd just like to highlight that for our refunding activity, $2.16 billion in refunding bonds achieved present value savings of $209.4 million, or 14.7% of the par refunded. There was also the $1.8 billion in remarketing, as well as with $912.1 million that retired through normal amortization. All in all, the net increase in debt outstanding was $1.99 billion. 1.99 billion to 2015, exactly. This is just charts the all-in TIC to for both the new money as well as we put the bands on there since we are developing that strategy. We charted the new monies against the 20-year MMD index and the bands against the 1-year MMD index. The TRB Series 2015A all-in TIC 3.99%. TBTA Series 2015A all-in TIC was 4.18%. And then this very small TBTA Series 2015B new money towards the end of the year, 3.88%. On the bands, you can see the first one was 0.3% all-in TIC, 0.28% for the DTF 2015A band, and then the TRB 2015B band that has a slightly higher all-in TIC. It did have $72 million in federally taxable bands. And we can talk about that a little bit. That was partly so we can address private use. Again, talking about the advantages of the band financing strategy, the transparency that Bob mentioned, we can see where the proceeds went, and it helps with being able to better match the assets and the debt liability by seeing, if it's a 40-year asset, we can better match the assets and the liability. Example was the 35-year bond that we issued for TBTA 2015A. One of the other benefits of that transparency is we can track the private use, so better compliance with the tax-exempt requirements. And as we get into the green bonds, we'll be able to better track and report for the green bonds, which will have its own reporting requirement. All in all, the bands give us the transparency that just issuing bonds doesn't do. These are, when we've done the band transactions, I think you'll probably remember we've been doing them as competitive transactions. These are the results of those band transactions. Pat has mentioned, but we typically allow for 10 million, as low as 10 million tranches in terms of the bids, which allows for some of the smaller firms to come in. An example might be FTN was able to, and I think that's First Tennessee, was able to come in with some of these smaller transactions and they came in for all three of our band transactions. I won't read through all of them, but this was just the winners and the amounts that they bid on. We had the variable rate transaction results. As you can see, while we still do have FRNs, we do have a lot of the variable rate weekly mode and daily mode backed by the bank support. So we had a lot of activity in 2015 where we did reach out to the liquidity providers and work with the bank support and have those enhanced bonds.
Are these the floaters?
The ones where you see the FRN rate, the mode is FRN, and that's the floating rate note. So we have the 5 of those are listed there.
Would that I could have that.
So most of those series are not. Most of those are the weekly and daily mode, the variable rate supported by banks.
Is that market alive again?
Yes, definitely. Again, for high-quality issuers and high-quality banks, very, very attractive rates. It's the auction.
That's not the auction rate.
Auction rate
Auctions
is.
are dead. Then
That's
it's
right.
different.
Yeah, we still have auction, some auctions there.
well.
Again, but that market is the one that really suffered the most, and it's had kind of a continuing kind of problem.
Can I ask a question maybe at this point? and you may need to check with Jerry Page on this, have we taken a position, do we intend to take a position in connection with the class actions that have been brought as a result of a variety of financial industry matters, such as, for example, the LIBOR market rate fixing there and the judgments that were obtained? There have been recoveries in that area, and I wondered whether we have pursued that, and if not, why not?
I know we've looked at the class action lawsuits and the damages that, have resulted from them. I would want to consult my litigation colleagues on exactly where we stand on that. Yeah. Will do.
Okay, continuing on. Our rating agency outreach, I'd like to emphasize our rating agency outreach actually is year-round. We're, especially because we have so many transactions, we're communicating with them all the time. We're providing information if, for example, when Bob gives his presentation on the financial plan and then we have the financial plan published, we're always proactively sending them information as well as responding to information requests. We did have a few specifically targeted meetings trying, to discuss our ratings. In one case, we engaged Kroll to rate our transportation revenue bonds, and we do have an AA+ from them. And as well as we met with Moody's about their new methodology, and the result was that we do have an upgrade to A1 from A2 on the transportation revenue bonds. And we also did get an upgrade a little bit more because they took it upon themselves to review it. The Fitch reviewed their DTF rating and did upgrade us to AA. Investor outreach, we have various presentations and one-on-one meetings throughout the year. And Pat also did conduct a video for Bond Buyer for their website. And our annual, what has become an annual investor conference and tour, was held this year at the 7th Avenue, 34th Street station, and we were able to, it's a little hard to see in the pictures, but we were able to go back, take everyone back to the signal relay room, so they really got a good look at what's going on behind the scenes. And in this case, we had over 80 participants, and because we were working so heavily with the liquidity providers, we invited investors as well as the liquidity banks, as well as the underwriters, so everyone could get a better insight into MTA and its transit network. What did I say? Sorry.
Who helps plan that? Is that a PFM financial advisor, the underwriting groups?
No, that's actually me. But I would like to say that it's a multi-agency effort. We had assistance from Capital Construction, Transit, of course, Long Island Railroad, as well as internally. We had the capital program team come in and speak, and we had the benefit of having Patrick Cashin, our MTA photographer, coming and following us on the tour and taking pictures. So we do appreciate all of the staff that assist us with these tours. Financing quarterly calendar, as you can see, another busy year. We have about $6.3 billion estimated for this year in terms of transactions, we'll talk about the remarketing in just a moment. So the remarketing outlook, as you can see, it's about $1.652 billion of bands that we're going to be retiring, as well as $413 million of either FRNs or letter of credit that needs to be remarketed. Overall, in all, it's $2.065 billion. And then we have some appendices for you. The bond finance capital investments, that's just that $2.62 billion that we mentioned earlier. I won't read through all of it, but you have it for your reference. And then this lays out all in all that same $6.8 billion transaction, but you can see the senior and co-senior managers and how things were assigned. And lastly, we have the summary of the cost of issuance. And I won't read through everything, but we do want to highlight with the MWBE firms that we are anticipated to earn at the end of the state fiscal year, so March 31st, 2016, they're anticipated to earn 3.887 or 3.89 million, or 37.06% of the total compensation to meet our target, as well as the service-disabled veterans firms are anticipated to earn just over 672,000 or 6.41% of that total compensation, also to meet that target.
I'm having trouble seeing, but the column total, the largest number, could you tell me what that is and for whom?
That would be the New York State bond issuance fee.
So we give New York State almost $18 million of our money back for the privilege of issuing bonds that are tax exempt due to federal law.
Yes.
I just,
Yes.
Yes.
Astounding.
Pursuant to state law, public authorities do pay the bond fee on all new issuance, and it's supposed to be on all refundings as well, but we have been asking on the refundings to get a waiver. We've asked for a waiver on everything. That hasn't been granted.
so the state takes more of our money than the underwriters and the bond counsel who slave on the transactions to close them.
Yes.
And what manpower does the state put into our deals? Do they staff our deals at all?
The state provides oversight of our capital programs and our debt management.
Thank you.
And that's it. Any other questions? Okay, thank you.
Sure. The other information item is a draft of the Independent Accountant's Review Report of MTA financial statements for the 3 months ended September 30, 2015. You'll find that on Director's desk. It will be presented and voted on later today at the Audit Committee meeting. We're going to move to headquarter items. We have 4 competitive procurements for miscellaneous personal service contracts for a total of $12,882,000.
May I have a motion and second? Any questions or comments? Mr. Merdler?
Were any of these the subject of bidding?
Which specific?
Any of the 4, well, let's start with J. Dietz and Associates.
Angel?
I believe they were extensions or modifications.
But did you at any point in modifying the existing contract check to see whether others had bid for the contract before it was originally let, and then give those folks an opportunity to bid?
In some of these cases, there were proprietary instances where you wouldn't have gone back and done that.
All right, that's in some of them. How about the rest?
I'm looking at them now, and yeah, for instance, the Wilden Homeland Solutions, that was federal subsidized money, so we wouldn't have gone back on that one. I can go through them individually.
Well, there's one here. Let's take a look at this Medgate. Did we go to the competitors of the first round?
No, we did not.
Why?
I'm going to defer to Weil on this one because it's specifically in IT.
Let me make my point to you. I've made it all day long, and I'm going to continue to make it. It is, as I understand it, the public policy of this state to have competition. It's good. Really it is.
Absolutely.
It's also something that's wholesome. But you're not doing anything to help it.
The Medgate system is a system that takes care of all of our OHS need, Office of Health Services. It is completely integrated with their business processes and contains all of the healthcare data and
I
drug
assume
testing.
it does a magnificent job, but I also assume there are others who are doing it, aren't they?
That is a good point. The cost of the software is usually a small fraction of the consulting and integration cost of these systems. If you would like, I'm very happy to do an alternatives analysis and come back to the board as soon as practicable with
Let me tell you
Medgate.
what I'd like, what I'm imploring you to do, give people a chance to compete. That is a bedrock of society, of our society. And you're not doing it. I give up.
No problem.
You win. Bureaucracy always wins.
Did we get a vote on that? Yeah. We need one? Yeah.
Is there a motion and a second? All in favor?
Oh,
Do we have a ratification?
have one
And
opposed.
there's a no vote.
Staying within headquarters, we also have a ratification for board approval of a multi-agency, non-competitively negotiated miscellaneous procurement contract to Intergraph Corporation for $889,000.
Before comment, second? Any questions or comments? All in favor? The procurement passes. Metro North.
Metro North, we have no items. For Long Island Railroad, there are 4 procurements, 3 of which are in the book, and 1 is a walk-in. I'll describe those right now. Within those in the book, the first is a contract modification for $172.4 million to a contract managed by MTA Capital Construction that will extend services provided by URS on the East Side Access Project through 2017 with an option to extend an additional year. The second being a contract modification to a competitive RFP for $3.8 million. The third being we're requesting approval to use the RFP process for services relating to constructing a second track on the main line Ronkonkoma branch. And finally, the walk-in, the LIR is requesting approval to award a competitive services contract of $663.1 million for GCT station, caverns, and track work as part of the East Side Access Project. We have a question, Mr. Merdler.
Mr. Chairman, please record me as voting no on Railworks. Exactly the same problem. No attempt to solicit competition.
Which item is that?
Railworks.
Roads, okay. Anyone else? Yes, Mr. Ballin and then Mr. Ralph.
Mr. Chairman, I'm going to agree with my colleague, Mr. Merdler, on number 2. He's persuaded me in the course of the day, so I'll cast my vote against that one. Thank you. For the same reason. Sorry about that, okay.
On the Railworks item, perhaps it came up in the Railroad Long Island Committee meeting, but do you know what kind of service plan to replace all of those ties would have to be in effect? Has that been discussed at all?
Hold on. Dennis Mann from Long Island Railroad is here.
For each of these installations, we do require track outages, which are very hard to come by, which plays into the discussion that
Unless
I
it
had,
was today or
unfortunately, I missed this
yesterday.
morning. Yes, so the work has to be scheduled in accord.
Right.
Yes, to answer your question, yes, there are track outages that are required.
And have you discussed a work plan for that yet?
We have a work plan that's in conjunction with the original contract. These additional ties will be installed as part of the track outages that were established to install the original set of half ties under that
Is that an
contract.
overnight process, or?
That I don't know. I can find that out for you.
Can I ask a question? Dennis, I'm trying to get through this. So are we to assume that this contract, the additional contract that we're voting on today, the contractor who's doing that is working at the same time that the contractor who's doing the first contract is working?
It's the same contract.
No, that's not the answer, that's not the question.
If we were to solicit for these ties.
Right.
We would then require additional track outages, more than likely, or we would need to have both contractors working within the confines of the tunnel.
Right.
During those track outages.
So my question is, the first contract is still ongoing.
Correct.
The contractor is working on that.
That's correct.
The second contract, which is the one we are voting on today, whether it is the same contractor or a different contractor, will be working the same time, most likely, that the first contractor is working on the first contract.
Potentially, yes.
Okay. That's what I thought the answer was. I just wanted to make sure that so the ability to have two different contractors working in the same area at the same time is probably not as efficient as it might be to have one contractor doing both.
Which is why I stated initially that we would more than likely require additional track outages because they couldn't work in the same place at the same time.
Thank you. Thank you.
But let me, Mr. Chairman, if I may respond. If you had solicited the people who had bid previously.
Yes, sir.
And had not been successful, can you preclude the possibility that the mere act of bidding might not have reduced the price for this contract?
I can tell you that there were 4 bidders that proposed on the initial contract. This contractor was the low bidder by over $2 million. I would assume, market prices being what they are, that the second low bidder would probably have a price that was in line with his original bid when the initial contract was bid, a higher price.
Okay.
Mr. Ballin?
But you're assuming the conclusion. I mean, why read the book? Just go to the last page. I mean, the whole point is the process may engender things that we can't even think of. Cooperation, cost cutting in some way that we as non-experts in this field can't even contemplate. So I don't know why, I mean, under the theory that you just outlined, why we would try for half the things we try. So I haven't been persuaded that assuming that the cost will be more if we do a process means we shouldn't undertake the process.
I'm inferring my answer from our previous bid, which was to seek competition. The bottom line to the issue here is that we have ties that are in a state of disrepair and need to be replaced. In order to do a competitive procurement, we are adding more time to that process, while I have a contractor who is already engaged in doing the work. So from an operational standpoint, aside from the business decision about how we go about procuring these ties, there are those operational issues that I think need to be brought into bear in the decision-making as to how we proceed here.
Okay. Your oral explanation is very helpful. Unfortunately, the written, it doesn't match the oral, and I realize I can't entirely, but I
Yes.
think here's a clear example where if you had written a little more and put a context, maybe attached the first one, it might have been much more helpful. I'm following more. I'm still not persuaded that we shouldn't have a process, but you're at least explaining it, and I thank you for that explanation.
You're welcome.
Mr. Merdler?
Mr. Chairman, this governor, to his enormous good credit, has made the point forcefully to us and every other state agency that we've got to start reducing the cost of various contracts and procurements. One known way of doing that is to stimulate competition. He's made it clear that that's what he wants. He's right, but we don't seem to be hearing him. And I'd like to ask you, can you hear him now?
Yes, sir.
Is there anything else? Because I have something. Yes, but this is the question and comment before the vote. The last of these procurements is the walk-in for LIRR. That's the East Side Access procurement. And even though the programmatic part of this discussion is probably more appropriate for CPAC. There is a risk management part of this that I had a conversation with the president of MTACC that I think bears on what we're talking about here. This is a competitively bid contract. We have a low bidder, who is the same contractor as two related and interdependent contracts that are ongoing in East Side Access. There is a more than very significant risk management issue here. If one piece goes, the other piece goes, cost can get blown right out the door. And that's the other side of the argument. When you have same people working on almost everything that's critical to a project. I'm going to vote in favor of it because there frankly is no other choice. And I have been personally assured, although I am going to ask for those assurances on the record at CPAC, that we are engaging in very serious risk management on all the contracts relating to this company that are working, that are locked in with each other, not only for the integrity of the project, but also to promote our ability to complete this project on time and relatively on budget. Anything else? We ready for a vote? All in favor? Opposed? The procurements carry. Transit and bus.
We have one multi-agency, non-competitive sole source procurement for New York City Transit. It's for the purchase of inventory and non-inventory replacement signal and switch system parts for an estimated total of $5.275 million.
A second. Any questions or comments? All in favor? The procurement carries. Bridges and tunnel.
We have one non-competitive procurement for personal services for a grand total of $3.359 million.
Is there a second? Questions or comments? Hearing none, all in favor? Procurement passes. FIMTAC.
There are no items for FIMTech, sir.
MTA consolidated reports.
Yeah, we just have those in section 11 for your information within the book. And I believe the real estate section is next.
Real estate action item.
Thank you, sir. We have 5 action items this month for your approval, each the subject of a staff summary. I'd just like to address a concern that I know John raised at Metro North this morning. As the staff summary indicates, the property in question, which was associated formerly with the GM plant, is, I think it's, as I understand it, it's capped with gravel and has been for many years. We are, in fact, in touch with DEC, seeking assurance that we will not be held responsible for any further remedial action. We expect that confirmation will be forthcoming, and as the staff summary notes, our agreement to go forward to acquire title is contingent on that result.
All right, thank you. Then you heard the comments. I mean, I know your prior life was a very good real estate lawyer. If you could try and put that hat back on when you think through.
Well, I can do better than that. We have Lou Leave, our environmental counsel, is here and can answer
Great.
any questions.
Well, you heard the questions,
Yeah.
as long as they're addressed.
I heard them
no-
indirectly, but I believe I have the.
Oh, no
the-
environmental liability risk if we're deciding to take an action to purchase property that knowingly is part of a environmental remediation.
Exactly. That's precisely the assurance we're seeking and I believe obtaining.
Mr. Merdler.
Is there any specific plan for the usage of this land when acquired?
My understanding is that it's used routinely for staging and marshaling in connection with maintenance in that section of the Hudson Line, and specifically is needed for Sandy-related repairs.
Is there any intention, current intention, present intention, to use it for the construction of a station?
No, not to my knowledge. I mean, obviously, that's been broached in the past, but as you know,
That's why I asked.
it's not far from Terrytown to Phillips Manor, and as I understand it, the geometry isn't right. And
But as of this point in time, there are no immediate plans for its utilization for that purpose. Am I correct?
that's my understanding.
Dr. Metzger.
Commissioner Mordler, I was concerned by some of the comments this morning, and I had the opportunity to speak to Metro North's attorney in greater detail. And now it's my understanding that these are actually tracks that Metro North has been using for many years anyway. And in this way, we now have control over those tracks. So that was the incentive for them to actually purchase this.
Exactly right.
Wanted to get rid of any rumors that were flying around.
Fair enough, thanks.
Are we all done on this? We need a motion? Second?
All of them?
The real estate items?
I have a question on one of them.
Right ahead.
Jeff, could you explain the LBGCT one? What is that? Little B?
This is a license, long-term concession for the provision of cell service in the two tunnels, the former Brooklyn Battery Tunnel and the Queens Midtown Tunnel.
No, little B.
Oh, I'm sorry. I thought you were giving me the acronym for Kerry, Hugh Kerry, and I was going to explain to you that he was a former
Oh,
governor.
no,
Sorry about
I'm
that.
a big fan
So,
of the
do
family.
you have a particular question about it, or is the way the scoring worked, or?
Yes, please.
Right. Well, as I think you know, we have board-approved guidelines for the evaluation of proposals that we get for retail at Grand Central. There's a 70% of the score is attributed to what we call the A score, which is direct and indirect. I'm sorry, it's guaranteed and percentage rent offered, and the B score, the 30%, is to some extent qualitative, if you will, with an eye to evaluating the potential of a tenant to enhance the surrounding enterprise as a whole, and to attract customers to the dining concourse. When there is a award of B score, we go to a selection committee, three-person selection committee. It was the unanimous recommendation of that selection committee to go with the second high bidder on A score. I believe that committee's deliberations are entitled to some deference. They've done I think, fairly magnificent job of maintaining the quality down there. Little Beat is a popular small chain in the city that fills a niche that we don't have down there, gluten-free, organic, hormone-free, et cetera. They have quite a following, and we believe they're going to enhance the overall operation there.
Thank you. I understand the need to keep fresh and the need for competition as spaces become available, but I am concerned that that the openings are being filled. It's just a concern, and I'm not saying it's necessarily factual yet. I guess we'll see. By more and more upscale type of food choices with concomitant price increases with respect to buying the food. And I just want to, I guess, keep in mind that this is a public transportation center, and there are lots of dining options throughout Manhattan, and we can't price people out, the average consumer user of our facility, to simply get what a small subset of people might consider to be higher quality or trendy types of foods, when we have to keep in mind that we have to serve our customer base, which are the users of the system. And I'm seeing, a few of these lately where it's really been close in the bidding process, and you guys get paid the big bucks to make these decisions in accordance with the policies, but I am noticing a trend, and I'm worried about what's going to be the cost to get some basic meals down there in the near future. And I also point out that right now there's a number of vacancies, so talk about losing revenue. I think right now there's a couple of them, at least I was there earlier this week. But I understand it's a tough job.
No,
so-
not vacancies. We have construction going on in some instances, and we make a point of continuing month-to-month occupancy.
I didn't mean necessarily from the standpoint of us as landlord. I meant from the standpoint of customers trying to go get something to eat. Under construction means there's no food options available. Okay, Mr. Chairman, I need to abstain from the one on Grand Hyatt Hotel, please.
Anyone else? Mr. Merdler? On the Hyatt. Congratulations to both of you. Is there anyone else? All in favor? Opposed? 2 abstentions. Thank you.
Can I just add one thing before we get off real estate? I always kid Jeff about our friendly Penn Station, but today, for the first time, I saw the movement of Dwayne Reed from one side of the corridor to the other side of the corridor, and it's amazing what lights can do. It opens up that entire area so that you can actually see what you're walking around with. So I want to congratulate you for making that happen, and hopefully it will be the next step in the transformation of the Long Island Railroad corridor down there.
Exactly. Thank you.
My pleasure. It's amazing what lights can do, yes.
Information items? None? Then our next meeting will be on the 22nd. And if there is nothing else, we have a motion to adjourn.
So moved.
Second, all in favor? Meeting is adjourned. Thank you.